Welcome to 2023. I'm so glad you're here, and I want to thank everyone who has been subscribing and who will continue to subscribe to the channel in 2023. I've got a feature-packed 2023 ahead of us. I've got a lot of different topics I'm going to get into. A lot of emails have been coming into me, and the first one I'm going to get to is my top 6 Schwab ETFs for 2023. So with that being said, let's get right into it. So the first things first. The first ETF I'm going to go over is SCHB. And I'm going to be in M1 today. I'm going to link that down below for anyone that hasn't subscribed yet or who isn't familiar with M1. But SCHB has a lot of good qualities to it. The first one is the dividend yield. Pretty good dividend, 1.65%. I've talked about this before, but you want to stay around that 1.5 and higher just to offset any expense ratios that you may see in the fund, as well as any volatility in the market. So great yield here. Wonderful expense ratio, very slim, 0.03. Really it doesn't get any lower than that. And I was thinking the other day, if you're just trying to build out a portfolio like this, you really do want to try to just squeeze every bit of expense out of your funds, and that's where the expense ratio here comes in. You'll see down here the asset allocations. It's got a lot of tech. So you've got Apple, Amazon, Google, J&J, Exxon from an energy perspective, but a lot of these key household names that you're going to want to pay attention to. Over the course of the last few years, you'll see it's went up just like everything else and has went back down. So I feel like this is a really good time to buy. Highs almost 2 years ago. I'm sorry, a little over a year ago of $56, and now it's trading $44 a share. So it's really something I think everyone should add. Number 2 is SCHA. So let's go check that one out. SCHA is a small cap, and you'll see, we've got some bonds, small caps, mid caps, and then some dividend compounders. It's typically, again, what I'm used to, what I recommend, and what's made me successful in my financial career. But if you look at this, again, very good dividend yield, a little bit lower than the previous fund, still good, a little bit higher expense ratio, but you're also getting some names that are more bigger growers. They're going to have a higher chance, I would say, to be a force multiplier in your portfolio. If I go down here, you'll see it does have some different holdings in it. So Casey's General Store, PFGC, which I've talked about on the channel before, Interactive Brokers. I use Interactive Brokers in my daily trading. So it's got a lot of different industries in there, and you've got a good blend here, as it says. So you're not going to get any of those Apples, those Googles, those are in the large cap, those are your blue chips. These are smaller, but if you do look back over the last 5 years, you're seeing the same trend. $54 back in a year ago. Everything cratered when COVID first started, ran it back up. So we're almost back to pre-COVID, where in order to buy it, so $40 a share. I feel like this is just a steal, a no-brainer. The next one I'm going to look at is SCHF. And if you haven't noticed by now, all these start with SCH. I'm going to go to SCHF. This is the International Equity Fund. If I go down here, the dividend is much higher, and the expense ratio is a touch higher than what we've looked at before. So you're really going to get a lot of good dividend yield by owning this. But the big difference here is these are foreign. So you do have common stock, but you're looking at international markets. So if I look out again, I go over the 2 to 5 year, we're seeing the same thing. However, in this case, it did bottom out and it started to return again, but it's still well below the highs we experienced back in September of 2021, December of 2021. So keep an eye on that. But if you go down here, you can see a little bit of energy exposure, AstraZeneca Pharmaceutical, ASML Holdings, another great name, Shell. It's a very diversified list, but these are all in developed markets, as it says here, foreign exposure, equities, and these are sitting in ETFs. So if you want international exposure on the Schwab side, definitely take a look at that. The next one I'm going to go over is SCHD. And that is the dividend equity ETF. No surprise. This is all dividends. This is a very dividend heavy portfolio. So you've seen in the last couple months, it's done very well. It bottomed out here back in, September 30th. It's ran all the way up to the 2nd. But if I zoom out, I still feel like it's priced for extreme growth here, because as interest rates continue to climb and the Fed hikes again, which they will, Dividends are going to be the safe haven, along with things like gold, silver, precious metals, and even things like Bitcoin. Those are going to continue to rise in value as interest rates rise and people start to switch out of high-end names such as private equity, venture capital, and those really experimental stocks and companies that people just can't take risk. You know, people now need to understand that we're in a market where you need to take gains, you need to secure and hold off losses versus trying to go for those massive force multipliers, you know, with 1, 2, 3, 4, even 5 stocks. So this ETF will keep things balanced for you. It'll keep you with a secure dividend, and it'll keep you running to where, you know, you're getting that steady stream. I call it mailbox money every month. And you've also got great names in here. So Pfizer, Coke, Lockheed. Obviously, Pfizer's done well during the pandemic. They made, you know, a lot of vaccines for people. Home Depot's been a great stock with people staying home with COVID. Very big dividend compound, or a very big force multiplier. Then Verizon. So definitely want to add that to the portfolio. The next one is SCHH. SCHH is a REIT. So that is a REIT, is real estate investment trust. So we've got some exposure here. You know, like we said, we've got bonds, we've got small caps, we've got international, we've got dividends. Now we've got REITs. And this is one that I'm sure a lot of people are going to be scared of, right? You know, it's real estate. We've all seen what's happened to the market in real estate. Interest rates, again, continue to go up depending on your market. Supply side may be down. But I think this is, you know, again, you want to have exposure to something like this. You don't want to be all stocks, all bonds, all dividend compounders, etc. You want that good exposure. So if we look at this, you know, wonderful dividend yield, 2.5, 2.55, 0.07 expense ratio. Again, anything under 0.1 or that 10 basis points is always great to see, because again, it's not eating into your profits and weighing your portfolio down. Here's some other holdings inside of this. So Equinix, a data center provider of space for companies when they want to build their own infrastructure. Realty Income Group, Crown Castle, American Tower, commercial office lending and real estate. Welltower, Simon Property Group, they own most of the malls in the United States, or a good chunk of the malls in the United States. You know, that could be hit or miss, but you're definitely going to be getting, again, that steady stream of income. And, you know, as you see here, we're well off the highs of December 31st at $26 a share. Now we're trading at roughly 19 and a quarter per share. So something to keep a look at. So let me go to the last one, SCHZ. SCHG is the is the U.S. aggregate bond ETF. The reason I like this is because, again, you have the highest dividend yield of any ETF that I've looked at, but you're also priced very low to earnings, and I think it's a really good buy here. So great dividend yield, low expense ratio. Current price is great. You've got some immediate or intermediate bond exposure. You've got mortgage-backed securities, or MBS, I've talked about before. You've got that in here. A little bit of cash, but you're looking at a really good way, again, to stocks and equities go one way. The bonds, the dividends, and the REITs can help balance that out. So I want to thank everyone for watching. I'm looking forward to a prosperous 23. Let me know which one of these, or if you have all of them, which one you have in the description below. I'll link my portfolio with these from M1. Everyone can follow what I'm doing in my portfolio. I'll link that in the description, but I want to wish everyone a happy and healthy 2023, and the best is yet to come. Take care. Bye-bye.